Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar strength has maintained into the second consecutive day and now clears the resistance level seen at 72.7080. There is one thing that concerns me is the fact is there is bearish divergence clearly seen from the RSI as the market displays this strong upward trek. The RSI has failed to support any renewed highs, that is, from the previous point that we can see here from where the shooting star holds. Nevertheless, the market is progressing further and now looks like we could see a squeeze towards 73.1520 or up towards 73.60, which could see a rejection. The euro continues to wear out, that is, the support level of 111 figure. In light of the pattern, and now the market awaits for Jerome Powell for his second testimony, could see further risk towards the downside as the US dollar strengthens towards 97.48. In his testimony overnight, though, Jerome Powell indicated that his support to 25 basis point rate hike next week is very predictable, and the fact is that the market is looking for that move, and actually given some concerns that a 50 basis point is now off the cards. Nevertheless, with the rate hike viewed, should see further weakness for the euro and look towards 110.75 and maybe lower towards 109.70. A very whipsaw price action for dollar yen and now looks towards 116.1025 as the next challenge. I will get a little bit cautious towards that top side due to the fact is that the market did reject previously and also back in late 2021. If we do see the pattern reject again, then we are looking back towards 114.70, which is in favour due to the MACD being somewhat weak. Sterling has recovered and near enough raised the previous day's losses and therefore looks back towards the top side of the range seen around 134.40. A break above there gives further guidance towards 135.1030 and reassess from there. Technically, I would like to see the RSI break through the midway point to support the top side call. With the concerns of how low the RSI was for sterling Kiwi, we're now seeing a bit of a rebound and I'm in support that the market should continue on and therefore look towards a potential target of 198.35.45 and reassess from there. Let me just bring that down so we can see where it is. 198.35.45, so somewhere around here, and then we should possibly see a little bit of profit taking return. It was another weak night, a weak night for gold after it retreated from 1,950 and now awaits the US Federal Chairman Jerome Powell's second day of testimony. After earlier today, he indicated that he favours a 25 basis point rate hike in the coming meeting. As you can see, the technicals are still weak, so let's see if the gold can actually drop back towards the support level seen around 1,878. It is in very, very strong rally for oil and we are extremely oversold. I feel the market at these current levels shouldn't sustain, but then again, with the fear factor still in, could still see a stretch towards the top side if this pattern maintains to 114. However, I am viewing that where we are at the moment could easily see a snap back towards 100 and reassess. Well, that wraps it for today. Thank you very much for joining me. As always, look out for the intraday report. Hope you enjoy the rest of the day.